Has Bitcoin hit its bottom? This is an emergency update. There's some early signals that Bitcoin possibly might have hit its bottom. And if we get a follow through, it might be a very positive sign for Bitcoin. So we're going to dive straight in. So if you like today's content, like, subscribe, hit the bell notification. But let's look at the technical psychology of buying and selling behavior when it comes to Bitcoin. Get ready to make some serious money from the markets. I've used my 15 years of trading experience to create a trend dashboard. You've heard the saying, the trend is your friend, ride it until its end, until it reaches its bend. Now we have a tool that makes it easy to do so. We have a bigger degree trend, which is set as a weekly, and it tells us it's a strong bull uptrend. Here, the smaller trend is on the daily. It says it's a bear downtrend. And then the instructions tell us what to do. So because these are pointing in opposite directions, it tells us to stand aside. But let's now unfold some data. So as the market unfolds, all of a sudden the trend changes. The higher degree is strong bull and the smaller degree is oversold. Instructions, consider buying on the lower time frame. We've also put the indicators on the chart itself, and it tells us where the bar is saying buy signal. Now we can set our buy on the 1 bar high. It would have been at this point here because we get the buy signal at the beginning of the day. And then we want to let the trend unfold, and ideally in a 5-wave structure, and then let the dashboard tell us when it's getting overheated. So let's just unfold and see how this price movement unfolded. We had a nice movement to the upside, very aggressive. And then we want to look at, right, do we see a 5-wave structure unfolding? Well, if you see this really, really clearly, there's a nice wave 1, a wave 2, a 1, 2, 3, 4, 5 over 3. We got a wave 4, and it looks like a pretty clean wave 5 unfolded. But now let's look at the trend dashboard. Higher degree is strong overbought, so the upside should be limited. Smaller degree trend, which is the immediate trend that we're looking at, is overbought. Upside should be limited, so we should be getting ready to sell on a lower time frame. Let's just unfold a bit more data. Bang! Here it says consider selling. So what would we do? We would put a 1 bar low stop loss, and then what happened? The market moves aggressively to the downside. How cool is that? Now you can access this for £1. Trial it. If you love it, you get to keep it and use it month by month. But you might be thinking, what about other assets? Can I only use one? No. If you look at the settings, and we give you a full training on how to do this, you can select up to 20 different assets. So if you want Bitcoin, XRP, Dogecoin, BNB, and then you might be thinking, well, Jakia, I have other assets. Well, you can just click over here and you can choose any asset on TradingView, whether it's crypto, whether it's commodities, whether it's the Forex markets, and it all shows you in a nice, easy fashion. And I show you how to set everything up. I'd give you the foundation training, and you also get the signals. So try it for £1. You're going to be blown away. And if you like it, then it's only £9.97 per month. So take your trading to the next level and get ready to make some serious money. So what we're looking at is the daily chart on Bitcoin. Now, before we go into the details of the technicals, what you want to know is the crowd psychology is what drives price. You know, the news has been incredibly negative recently with FTX, with Solana tanking, with a few other things happening in the world right now. You know, the mainstream media, a lot of fear, uncertainty, and doubt. But that is common for extreme wave 2s. Now, I'm just going to zoom out for a second. So I'm going to give you a macro picture on this, because if I can zoom right the way out with Bitcoin, and we'll come back to this. I'm just going to hide this. I just want to show you something in a really, just a clear way. So we've had since 2017 this amazing move up. And then since November 2021, we've had this big A, B, C style correction. And this move to the way up is referred to as a wave 1. Like it's a whole 5-wave sequence. And markets tend to move in 5s and 3s. And this big correction to the downside is what you refer to as a wave 2. And the news at a wave 2 is often extremely bad. And with the FTX saga, with other things happening in the world right now, with, you know, recession, doom and gloom, this is common for wave 2. So we just know that. So when I hear all the negativity and everything else, in my mind, I'm thinking, okay, we're probably towards the end of a major correction. But then we want to get a bit more detailed on how we can really look at this in an objective, mechanical manner. So if I just bring it back to where we were, I just want to bring this details back. Markets move in 5s and 3s. So what we said months ago is this correction over here looks typical of some type of wave 4. Wave 4 is a profit-taking wave in, even on the upside. But what typically occurs is if this low is exceeded, which it has been down here, there's something called an external retracement. An external retracement is it's a ratio of buying and selling behavior that's really reliable, really reliable. And the particular ratio as a minimum is this 1.272. In other words, what we do is we measure the distance between here and here. We do something called an external retracement of an additional 272%. That's what this line dictates. And we tag that this week, right? And that's really important. But what's more important is we've had this aggressive move down. When was this? This was on August. So it was August, mid-August, aggressive move down, this irregular correction over here. It's called a running ABC. And then we had a massive sell-off over here. And then a little bit of a wave 4 and a final wave 5. So what you want to know, there's some rules when it comes to buying and selling behavior. And the rules are really helping us measure crowd psychology. And the rule of thumb is wave 3s cannot be the shortest out of wave 1, 3, and 5. So this is wave 1. This is wave 3. And this is wave 5. That's what it looks like. That's what it looks like. But this one cannot be the shortest. Now, currently, it turned out that it is shorter than wave 1. Yo, what'd you get? Why are you telling me this? Why are you telling me this? Well, the reason I'm telling you this is it means that wave 5 will be less than wave 3 in terms of price behavior. So it's likely we may have hit this bottom. So I'm going to cover a few things because what you want to do is look for a confluence of events. You want to look for many things, ideally 3 or 4 things that tell you the same piece of information. So first we're going to just zoom out for a second mentally and look at the momentum position. So I'm going to bring up the momentum. Now we've got this new dashboard that we've got down here. And it's fantastic because we can look at the bigger trend. And I've set it as the weekly chart. And it says is a strong oversold, downside limited. In other words, the weekly momentum is at a low. So that indicates to us that the market is likely to make a low that's going to hold for a number of weeks. And that's at or near its low. That's what that's telling us. And then on the daily chart, it says a bear downtrend. Basically, that's based on this bearish reversal over here. But it looks like we're going to get a bullish reversal. So there's 2 things over here. We've got higher degree momentum telling us we've probably got a low that's going to last a number of weeks. We've got this very significant 5-wave structure, 1, 2, 3, 4, and a potential 5 over here. We've got this Fibonacci price ratio, which is the minimum for this wave 4. As in when we measure this and we do this, it's called external retracement. Very, very powerful that we can look at this. So now what I'm going to do to finish on, while I was looking at this morning, was the hourly chart. The hourly chart gives us a massive clue because what we want to look at, why we knew it was highly probable that this low was going to get exceeded, even back in August, we knew it. When I say knew it, it was highly probable. Why? Because these waves over here were overlapping waves. They're overlapping one another. And that's what you call a corrective structure. And when you see a corrective structure, you normally get a continuation of the former trend. And this is the former trend over here. So what we're going to do now, to really articulate this, that is highly probable, at least some follow through to the upside, and what the minimum expectation is if it's not the bottom, but why it's likely or it's got a good chance of being the bottom. So let's now just go into an hourly chart. All right, so I'm going to go into the bottom right hand corner. And what I want to do is I want to look at the recent buying behavior, even if I just get rid of this for a second. Right, let's just keep it really, really clean. Recent buying and selling behavior since, let's look at the date, the 21st of November, right? Remember, market's moving 5s and 3s. If I just go to a line chart, it might be easier for you to see. Do you see any particular pattern, right? And I'm referring to this part of the market here. This part of the market here. You want to pay really close attention to this. It's really significant, really significant. The big question that I ask myself is this move, this here, is it impulsive or is it corrective? In other words, are the waves overlapping one another, or is it higher highs, higher highs and then higher lows as well. So it's a higher low and this is a higher high. Well, it's clearly the second one, right? It's clearly the second one. So that's really important. So let's just draw that onto the chart. This is a 5-wave structure. You got a nice wave 1, a wave 2. There's a couple of wave counts, but the most obvious one is looks like a very aggressive wave 3. Could call this the wave 3, wave 3. Either of them are correct. We don't need to get too anal about it, but let's just call it this one for now. 3, 4, and a 5. And we said this, one of my weekend workshops, if you're in my private Telegram, we said there's 2 possible wave counts. And I think I did it on one of the YouTube pieces that we did not that long ago, that this is a potential wave 5 top. But typically what we should find is an ABC correction. And look what we've had. We've had this really clean, looks like initial wave A, looks like initial wave B, and some type of 1, 2, 3, 4, 5 of a wave C. So let's just keep it the same color so we can make sure we're staying focused. Let's draw on the waves. So look at that. It looks like a textbook 5-wave move to the upside and an A, B, C correction. So what we're going to look at next is what's typically the minimum that would occur if it's not the bottom, right? If it's not the bottom, if this is not the bottom, what's the minimum that we should expect, which is typical of buying and selling behavior when we see a 5-wave move to the upside followed by a 3-wave correction. Now, just this correction, we just want to apply some Fibonacci ratios, right? Because there's typical buying and selling behavior, and it typically hits these ratios. And 50% is the typical minimum. 62% is another very common one as well. And then we have something called the alternate price projection, where this wave A has a relationship to this wave C. And there's two real key ratios here. I'm just going to draw them in very fast. I'm going to just do it over here. But this gives us an indication of what we're looking at in terms of buying and selling behavior, which makes it highly probable. We've got the 100% and the 1.618. So it's in that range, right? But really, we can just keep it a bit more simplified. Here's the key ratios here, and we'll just get rid of this one as well. And that gives us enough information. We can also look at the external retracement. I'm just going to draw this in. This is the relationship between wave B and wave C. Really powerful. This is really reliable, guys. This is, you want to be using this. This is the typical maximum. So we've got this Fibonacci cluster. So we've got pattern, we've got higher time frame momentum, we got Fibonacci price, and that's enough information for us to go, okay, this is likely going to hold, and we're more than likely going to see this high get exceeded, right? That's and depending if it gets exceeded and we get follow through, that's going to be important. So now I'm going to show you some things that you should expect. All markets, not just Bitcoin, but there's a few things. So we don't know if it's the bottom. There's no way of knowing. It's just that there's a few pieces of information. The weekly momentum is oversold. So let me just show you what I mean by the weekly. Weekly I keep in the top left-hand corner. I'm just going to go into this chart. And what I'm referring to as oversold is this momentum over here. You can see this crossover married up with this low, this crossover married up with this low, this crossover here married up with this low, and then it looks like over the next week or so, the momentum is likely to cross over and it's in this low area. So are we going to get a reversal? And if we get some type of follow through and exceed this high, then it's likely we're going to see some type of follow through to the upside. Now, will it be the ultimate low and then a whole new bull run? We don't know that yet, but we don't need to know that yet. So let's just go back into the 60-minute chart. So a 1-hour chart. So how I would look at this is I'm looking for a long position right now. I'm waiting for the daily momentum to be bullish. So I want to look for a nice tight entry so we can long on Bitcoin. But typically, the minimum expectations, more often than not, if we're being conservative, if it's not the bottom, we can still look at this in a way which, let me just draw this out like so. These are the two particular price ratios that we're likely to hit. We're probably going to see Bitcoin hit 17,000 and maybe overextend to 18,000. Now, if it overextends to 18,000, then that's going to be a higher probability that this is, in fact, a new trend. So I'm going to finish on one last thing. Because if we just go back to a daily chart, I want to just talk about, if I can get this in the chart properly. Now you see I've got CPI, by the way. I've got CPI dates on the chart. It seems to be very significant, especially recently, right? Where this CPI announcement, there was a move up. With this CPI announcement, move down. CPI announcement, move down. Announcement, move up. The day before this CPI announcement, a move down. The next one is 13th of December. So we want to be on high alert. You know, it's around 2 weeks away. 2 weeks away. So we don't need to focus on it right now, but just to be on high alert, that's in the imminent future. What I just wanted to show you is this low is a significant low, but the closing low is even more important. What do I mean by closing? So the closing price, this low over here, is why I've drawn this dashed line across. So why this is significant is if Bitcoin, if I can now draw it like so, I know there's a lot of lines on the chart right now, but if Bitcoin closes above this high, that's a really bullish sign. That's called a price overlap. But this here is a closing overlap. So that's even stronger. So that'll be a really strong signal that we're going to get some type of follow through to the upside. Now, again, we'll take it with a pinch of salt. But what we want to see, the big question is going to be, is it going to be some type of A, B, C correction and then a continuation to the downside? Or is it going to end up being a 1, 2, 3, 4, 5, which gives us good confidence that any correction is just a correction and then we'll get more follow through to the upside. Now, at this stage, there's no way of knowing because the initial parts of a wave 1 or A, 2 or B, 3 or C look the same. So how we denote this is, I'm just going to do it like so. But we can make money in both, right? We can make money in both and we can manage our positions in a similar manner with both. Let me just get rid of these on this particular time frame. It's going to clean up the chart a little bit. I'm going to clean up the chart with this as well. All right, so what we want to look at is I'm going to draw it like this, just so I'm just want to make it really clear, right? Because you know, capital preservation is going to be key to making a lot of money in this market. So we don't need to know right now exactly what it is, but it's looking impulsive. That's the key thing. So we can write it as a wave 1 or a wave A. And at this stage, we don't know. Again, and we don't need to know. Let me just make that a bit bigger for us. Right, bang. And then this down here looks like, especially now we've got this bar with a follow through, a wave 2 or B. Now, because the bar is actually overlapped into this range over here, it's looking like it's going to hold. But we want to ideally see this high here get exceeded, and that will confirm this low. So for now, I'll just put a question mark here to say it's not fully confirmed yet. We want to see a nice follow through. And then, depending on how it responds, if it does break this high, how much follow through do we get? That's going to give us a lot of information. And if we break this high, that's going to be real confidence for Bitcoin. But more so, if we break this high, which this is price, the price is just below 19,000, around 19,000. If we break 19,000, that could be really significant for us, just as a whole market. So again, we don't know if it's going to end up being a wave 1, 2, 3, 4, 5, or let me just draw it like this. I'll put it in red because I want to draw it like this because sometimes it's hard for people to see what the possibilities are, but right now we don't know. Or it could end up just being a wave, again, a wave A, a wave B, and then some type of wave C. And at this stage, we don't know. So how you manage this when you're thinking about it is at this position. If this occurs, you see that both have to go through this range for either to occur. Is you take some profits off the table, become risk-free, move your stop loss to break even to entry point over here. So if it is a correction and we get a new low, then we've made some money, we locked in our profits, or we protected ourselves from the downside, but also keep enough of your position, the second half of it, in the market so you have plenty of room for the upside. So Bitcoin, has it hit its low? Let me know what you think. But looking at it from a objective technical standing where the psychology is being reflected to us in the buying and selling behavior, it looks pretty much like we're going to get at least a wave C, right? At least a wave C, which will be healthy for the market, which could last 2, 3, 4 weeks. So we're entering into December. So it might be a December, nice run in December, which is quite common for crypto. So the December run, we didn't get one in November, not really. And we'll see how it goes into 2023. So there you have it. There you have it. If you've got value from today, we're going to keep a very close eye. Like, subscribe, hit the bell notification. Let's finish on a quote. I normally read a quote from my book, but I'm going to keep it simple. The trend is your friend. Ride it until its end, until it reaches its bend. We're like surfers, and our job is to catch the wave and then ride the wave. Catch the wave and then ride the wave as long as we can until it reaches its bend, and then, just to move with the waves. So right now, we have had some nice follow through on a 5-wave structure with Bitcoin. We've had a nice ABC correction as we saw, and we've got the initial parts of a further follow through, and it's likely to follow through looking at the weekly momentum. And we're probably going to get a bullish reversal on the daily. These are called confluence of events. There's momentum, pattern, price. And if we can keep things really simple with a nice simple entry strategy, manage our positions in a logical, objective manner so we can really maximize this trend and see if we can make some really good profits. And again, if Bitcoin is going to be trending up, then that means a lot of others are also going to be doing the same.